Bitcoin's fear and greed index has dropped to 5, the lowest level ever, as extreme fear and uncertainty grips the market. With the post-halving performance the weakest of any Bitcoin cycle, and gold running laps around the debasement trade narrative, Bitcoin conviction is being tested to the extreme. And right on cue, Deutsche Bank says Bitcoin is no longer digital gold, a Financial Times columnist says it's going to zero, and strategists are calling it a failed hedge. So is Bitcoin really breaking this time, or is this just what the bottom feels like? Welcome to No Second Best, the show where conviction meets reality, and reality points straight to Bitcoin. I'm your host, Hurley. Now let's get into it. A great way to capture the current sentiment in Bitcoin right now is to take a look at this chart, which shows the performance by cycle following the halving. You can clearly see that when measured after the halving in 2024, this cycle is the weakest we've ever seen by far. As I see it, from this data, you can draw one of three conclusions. 1, the halving matters less now. 2, something is structurally broken. Or 3, the ETF launch distorted the cycle. Zooming out a little further from the November 2022 bottom to the October 2026 peak, Bitcoin rallied over 600%. That's an enormous move by any standard. But what makes this cycle different is that much of that gain happened before the halving. Post-halving, we saw a sluggish and slow march up with very muted volatility, which looked nothing like previous post-halving cycles. For the first time in Bitcoin's history, there was no clear retail mania and no explosive upside. And when price disappoints like this, the narratives rush in. Quantum FUD is huge right now. Corporate treasury leverage is suddenly in a death spiral, and lots of takes saying Bitcoin is a failed hedge versus gold. And when you stack all of that together, it starts to feel like something broke. But here's what's actually happening. When price weakens, the narrative shifts to justify it. When price strengthens, the narrative shifts to explain that too. Markets don't move because the story changes. The story changes because markets move. And beneath all of this noise, the charts, the headlines, the hot takes, the structural reality hasn't moved an inch. Global debt didn't shrink. Governments didn't discover fiscal discipline. Central banks didn't suddenly renounce money printing. The monetary regime we've been living under didn't reset itself just because gold had a strong year. Bitcoin didn't change. The world didn't change. The world around it didn't change. Only sentiment did. And sentiment is the most volatile input in the entire system because it's based on human emotion. James Check, on What Bitcoin Did, recently explained why it feels like gold has won and Bitcoin has failed the debasement trade narrative.
I don't think the debasement trade's been what's driving the market, though. I think this is people, again, like, is there really significant QE and like monetary debasement going on? Anything close 2020s, 2021, even post GFC right now? Not really. So, this idea of the debasement trade, and it's really important to recognize gold and silver and Bitcoin, they all have different supply and demand profiles. Mm-hmm. I think, honestly, of the one thing that killed sentiment, treasury companies were bad, crypto has been bad, but like watching gold go up, I think has been the nuclear bomb for Bitcoiner sentiment. But I think they just got the story wrong. There was zero chance that all the sovereign nations were going to go, yes, let's buy Bitcoin at a $2 trillion market cap over gold, which we've already got tons of. And I don't have to convince my old man what gold is. I don't have to explain a thesis for gold. They get it, right? It's a cultural thing in many places in the world. So from my view, gold just has that sovereign bid. It's always going to have that sovereign bid. You don't have to explain it to anyone. Silver's had a supply and demand deficit as an industrial metal for a long, long time. Throw in there some folks who are willing to pay a $70, $50 premium for silver coins, and you've got a speculative bubble. Platinum, it's, are we getting rid of the internal combustion engine anytime soon? No. What's died off recently? That everything's going to be EV-ified. So, catalytic converters, platinum, number go up, plus some speculative demand. Bitcoin's its own thing. It's going to take a long time for people to come around to it as a savings asset. You and I see it as a savings asset, but it still has that, it's a levered tech stock, blah, blah, blah. Totally. But over time, and just think about this for a second. We're going to bottom. Again, if your decision tree is that Bitcoin's dead, then ignore everything I'm about to say. If Bitcoin doesn't die, at some point we set a bottom. Once we've set a bottom and it starts moving higher, all these narratives about Bitcoin being dead will just go out the window. Momentum traders will come back. It will have its silver moment. And if you look at, like, if silver can do what it did, if gold can do what it did, you're telling me that Bitcoin can't do what it's going to do. So from my perspective, price often solves all narratives. Time generally solves price. You give it a long enough time, hodler's going to put a floor in, this thing will start moving. And then suddenly all these narratives, like if you go through another all-time high, suddenly people just go, oh, Now I can't blame it on stimulus. I can't blame it on the ICO boom. I can't blame it on the ETS going live. I can't blame it on the president. Suddenly it's like, I'm just actually wrong, aren't I? It's going to get to the point where the critics just realize I just actually am wrong. This thing just keeps coming back. So from my perspective, right, once we put that floor in, we're going to start moving higher. Momentum traders come back. The debasement trade will come. It's a longer term view. And I think it's so easy for people to take long term, guaranteed, mathematically guaranteed macro things and expect them in the next daily price candle. It's going to happen. It's just not going to happen in the next daily price candle. Macro moves at a glacial pace and then all at once.
It's clear we are not seeing anywhere near the kind of money creation that we saw post-COVID. Back then, liquidity was explosive. Balance sheets expanded aggressively. Fiscal stimulus was overwhelming. That was a true debasement impulse. This time, we're not even close. So if we're not in a major debasement wave, then gold outperforming Bitcoin doesn't prove that Bitcoin failed as hard money. It means the macro driver people are expecting simply isn't active right now. So the gold strength we've been seeing may have far less to do with debasement and far more to do with reflexive safe haven behavior in a fragile global environment. That's not the same trade in most investors' minds, and this certainly doesn't invalidate Bitcoin's long-term monetary thesis. In fact, if anything, it reinforces something important. Bitcoin is not a short-term hedge for every macro headline. It's a structural monetary alternative. If you expect Bitcoin to react immediately to every macro stress event the way gold sometimes does, you're still thinking about it like a tactical asset, not a monetizing network. So if Bitcoin isn't being pulled higher by emergency money creation, then what exactly is driving it forward? Because price isn't the only thing that matters in a monetizing asset. Adoption matters, depth matters, ownership distribution matters. And this is why Eric Yakes reframed the entire conversation in a way that I think is incredibly helpful for this moment. Instead of asking whether Bitcoin is winning or losing based on a 6-month performance window, he zooms out. He describes Bitcoin not as a straight line upward, but as a series of adoption S-curves.
Number go up tech, or Bitcoin's price going up, is certainly the thing that's going to be converting the most people over time. And I think the reality is that it's gone up so much. It's converted a significant amount of people. It's made material progress. It's owned by, or at least hundreds of millions of people have exposure to it at this point in time. And there's very few people in the world you can encounter that haven't heard the word Bitcoin, aren't aware of it at this point. They have no idea what it is, but the brand, it's so big that it's just a globally known thing at this point. So I think it's gone very far in terms of its adoption, but to get it to the next level where right now it's a $2 trillion asset, and what makes it 10 trillion? Now we're talking about make it the most valuable thing in the world. We're talking about pretty big numbers that we're going after once we say it's going to attack the market of gold or some other major commodity. And like we're talking about the top of the billboards. This is the top of the leader charts. So big things have to be on the horizon to really start moving in that direction. The way that we think about things internally at our firm is, we kind of see like 3 major S curves of Bitcoin that are coming. And the meme of gradually then suddenly is certainly the mode that it's going to be following throughout each one. And like the 3 main S curves are kind of hitting a massive inflection point of adoption across each function that it performs. So the first one is store value. For something to become a good form of money, it has to start as a really good store value. That's something that makes everybody want to own it over time. And there's going to be some sort of S curve in that process. And, the best marketing tool for Bitcoin is the neglect of fiscal austerity that politicians are practicing today. And there's going to come a point when it hits that S curve, either because of that, or because the narrative is simply spreading far enough and people start to realize it preemptively. Either way, one or the other is going to cost something that direction. And to look at the trends and think anything else is a very hard argument to make. I think that we're close. I think that we're going to look back on 2026. It won't be obvious by the end of 2026, but I think in like 2028, we'll be looking back and saying like, oh, this kind of was starting in 2026. And then that's when you start to see an S-curve happen with medium exchange type adoption. And then it's like when people start trading in it so much, well, now it's like, why don't we just start denominating our prices in it? And like, those are kind of like the 3 main S-curves we see with adoption over time. The point is today, gradually is what creates suddenly. Like, we want Bitcoin to be more gradual because that's what gives everybody who manages a lot of money all the indications they need to justify within their mental framework, oh, I should own a lot more of this because it is a lot safer, it is a lot more boring. And then it spikes a bunch and they're like, oh, well, I'm happy that happened too.
What he's outlining here is something we've mentioned on this show a lot in the past. Store of value first, then medium of exchange, and finally, unit of account. And his key phrase is this: today's gradually is what creates tomorrow's suddenly. Right now, it definitely feels gradual. It feels underwhelming. It feels like Bitcoin should be doing more, but gradual adoption is what makes large capital comfortable. Volatility is compressing at a rapid pace. Even following the huge move down this past month, Bitcoin's 12-month volatility is at its lowest level ever. As volatility continues to compress, liquidity deepens. The asset starts to look less like speculation and more like infrastructure, and that's what unlocks real scale. We tend to think that Bitcoin needs explosive upside to prove itself, but the truth is, explosive upside usually follows periods of compression, and those compression phases don't feel exciting. They feel frustrating. They feel like doubt. They feel like headlines turning negative. But if Bitcoin is going to compete at the very top with gold, with sovereign reserves, with institutional balance sheets, it has to transition from being perceived as a trade to being perceived as money. That transition is not violent, it's methodical. And that's why this moment feels uncomfortable, because monetization is happening, but it's happening quietly. This is the part of the cycle where people start obsessing over the bottom. They want the exact wick, the perfect entry, the screenshot that proves they timed it right. But markets are not an event, they're a process. James Check also addresses this directly.
My view is that the odds that we've put a bottom in have gone up significantly. In terms of capitulation pressure, back at the 2022 bottom, we had $1.5 billion a day in capitulation losses, mostly driven by 2022 buyers, so people who bought in the bear, and 2021 top buyers. We just had exactly the same amount, 1.5 billion. You can argue Bitcoin's bigger, so the number could be bigger, potentially. But class of 2025, class of 2026, we saw a massive capitulation by top buyers and people who bought that 80K bear flag, $1.5 billion in a single day. And that's been going on for about 3 days now. So we've got a massive capitulation type wick. Now, we may go lower. Markets, and this is such an important idea, markets are a process, not a result. And I think a lot of people get caught in this mind frame where they're going to sell the perfect top.
Yep.
And they're going to wait and they're going to buy everything at the perfect bottom.
And no one ever does it.
No one ever does it. And what I can tell you now as a fact is there is no committee or industry or entity that sends you a trophy or a medallion or some kind of prize for buying the absolute bottom. I'm of the view that the best way to do this is just to buy the bottom. Too many people want to buy the bottom on the day. It's going to happen at like 4 a.m. your time. You're not going to have your limit. The amount of people I've already seen be like, I got within $200 of my limit order. You know, like I just turn on DCA heavily.
Mm-hmm.
I just want to buy the bottom. And if you really think about like 2018, 2019, do I care that I bought it 6K, 3K, 4K, 5K, 8K? Do I care in 22 that I bought it 20K, 22, 23, 15, 17, 18? I don't care. I want to buy
them all.
I buy all of it. So just buy all of it.
So for everyone trying to wait and time the exact bottom, stop it. In real time, bottoms feel uncertain. They feel like doubt. They feel like you're about to make a mistake. By all metrics, Bitcoin is in deep value territory right now. Could we wick lower? Of course. Markets are volatile. There's no guarantees. But sitting on your hands waiting for some magical number that feels emotionally comfortable is how people miss the entire move. The market doesn't reward perfection, it rewards conviction under uncertainty. Because while everyone debates whether the halving lost its power or whether gold won the hard money trade, the actual structure of Bitcoin hasn't moved at all. The supply schedule didn't change. The rules didn't change. The monetary policy didn't blink. There's still a new block being mined roughly every 10 minutes last time I checked. At the protocol layer, Bitcoin is software. It runs on code. It's open source. It's distributed across thousands of nodes around the world. That part is obvious, but the market clearly is not valuing it as monetary infrastructure. It's valuing it like a high beta growth asset. If you overlay Bitcoin against the IGV software ETF over the past 5 years, the correlation is striking. When growth sells off, Bitcoin sells off. When tech rallies, Bitcoin rallies. That's not because Bitcoin's value comes from selling enterprise subscriptions or expanding margins. It's because capital still buckets it alongside risk assets. It's being treated like software equity risk at the time where AI is threatening software. It's not being treated like a sovereign monetary asset. In other words, the majority of the investment community still has no idea why Bitcoin has value. Gold isn't valued for earnings growth. It isn't priced off quarterly cash flow. It sits in a different mental category. Bitcoin hasn't fully crossed into that category yet. And until it does, it will trade with the assets it's grouped beside. This is not structural failure. It's categorization lag. If you believe Bitcoin is monetizing in real time, then moments like this aren't about precision. They're about discipline. They're about whether you've done the work to understand what you own when it's temporarily being priced as something else. And that's exactly why Swan Private exists. At Swan Private, we work with families, individuals, and businesses who are serious about holding Bitcoin for the long term. Custody, inheritance planning, tax-aware structuring, balance sheet strategy, not trading noise, not leverage cycles, just a disciplined approach to accumulating and securing the world's most secure monetary network. If that resonates with you, you can learn more at swan.com/nosecondbest. Now let's zoom out again. Extreme fear at 5, the weakest post-halving performance in Bitcoin's history, gold outperforming, headlines calling it dead or dying again. But the rules haven't changed. The incentives haven't changed. The global debt hasn't changed. Only sentiment has. Emotions. And sentiment is always the last thing to catch up. But now I want to hear from you. If gold keeps outperforming for another year, does that weaken your Bitcoin thesis? Or does it strengthen it? Are you stacking at these levels or waiting for lower prices? And more personally, what helped you hold conviction during your first real bear market? Drop your thoughts in the comments below. Like this video if it brought clarity. Consider sharing it with someone who needs perspective right now. And subscribe to the Swan Bitcoin channel so you don't miss what's coming next. Thanks for watching. Have a great weekend. And remember, in the competition of money, there is no second best.